Before talking about recalculating take profits, let me clarify something important. When I talk about position, I talk about the original 0.02 lot position. When I talk about trades, I talk about the single trades of 0.01 lots each that we have on the MetaTrader 4. So in our strategy, one position is always split into two trades. Now, in the previous lecture, we have seen when and how to add to a position, a fundamental part of position management for our strategy. But as we have seen in the last live trade on the market, when we add to a position, we are left with the question mark of the take profits. We have learned how to set take profits when we have a single position, or better, a position split into two trades, but we haven't learned how to handle take profits when we have more than just the two initial trades. So let's introduce rule number 2 of position management. Whenever we add a new position, we set all our take profits once again. We start from the price of the latest added position and proceed at intervals of 1 ATR each, assigning these new take profits from the worst entry price to the best entry price. Now, don't be scared, it's just a definition. We will keep it here while we work through an example so that you can see that it is easier to apply than how it looks. Let's revisit our example from the previous lecture on Eurodollar. We opened our trade at 1.1525 for 0.02 lots split into two trades of 0.01 lot each. The ATR was 10 pips, so our first take profit was at 1.1535 and our second take profit at 1.1545. We add to the position every time the price moves 2 ATR against our initial trade, so the first additional position is at 1.1505. The price goes down, reaching 1.1505, and we open another position, again split into two trades of 0.01 lot each, keeping exactly the same lot size as the original position. But now what happens to the take profits? We currently have 4 trades. We have a buy position for 0.01 lots at 1.1525, take profit is at 1.1535. Then we have a buy position of 0.01 lots again at 1.1525, the take profit is at 1.1545. Then we have a buy position of 0.01 lot at 1.1505 and the take profit is not set yet. And then we have another buy position for 0.01 lot at 1.1505 and the take profit once again is not set yet. Looking at the rule, we know that whenever we add a new position, we need to adjust all our take profits. How do we do that? We start from the price of the latest position we opened, in this case 1.1505, and we set take profits at intervals of exactly 1 ATR. So we start from 1.1505, which is our latest entry, we add 1 ATR, so we add 10 pips, and find the first take profit that will be 1.1515. To which position do we assign this take profit? We assign the new take profits starting from the trade with the worst price, going step by step until the best priced trade. These trades are already ordered from the worst price to the best price, so we assign this take profit of 1.1515 here to the first trade. From here we add another ATR, so 1.1515 plus 10 pips, and we have the second take profit at 1.1525, which we assign to the second worst trade, in this case once again 1.1525. We move another ATR, so another 10 pips, and we have the next take profit at 1.1535, which we are going to set for our third worst trade. We add another ATR, another 10 pips, and we set our last take profit at 1.1545. Let's recap what we just did. The price went down at 2 ATR from the entry to 1.1505, so we added a new position. Whenever we add a new position, we set all our take profits again. We started from the price of the latest added position, which was 1.1505, and proceeded setting take profits at intervals of 1 ATR each. So the first take profit was at 1.1515, the second at 1.1525, the third at 1.1535, and the last at 1.1545. We assign these take profits starting from the worst entry price to the best one, so essentially we close our worst positions first. Now, let's say the price continues moving against our trades, again by 2 ATR reaching 1.1485, where we add once more to our position. Now the situation is this. So we have all the trades we had before, with the take profits we set before, but we added another position, split into 2 trades. What to do now? How do we adjust the take profits? This is an important part of position management, so I really suggest you pause the video for a moment and try to figure out how we should adjust the take profits. Okay, so once again we start from the latest position, which is 1.1485, and set take profits every 1 ATR step, starting from the worst price down to the best price. So 1.1485 plus 1 ATR, so plus 10 pips, and we have 1.1495. Since we have already ordered the trades from the worst price to the best price, we can amend the take profits from top to bottom, and we insert 1.1495 as a take profit for the first trade. We proceed by adding another ATR, another 10 pips, and the next take profit is 1.1505. Another ATR, we have 1.1515 as our next take profit. Another ATR, and we have 1.1525 as our next take profit. Another ATR, and we have 1.1535. And we add another ATR, and we have our last take profit at 1.1545. I hope you were able to complete this exercise correctly. If not, don't worry, because we will have plenty of exercises and real-life trades to practice. Let's have a look at a real market example to see how it works in practice. Remember this? These are the trades on US dollar Japanese yen that we opened in the previous lecture. What to do? Remember the rule. I put it here for you to have a look at. Whenever we add a new position, we set all our take profits again. We start from the price of the latest added position and proceed at intervals of 1 ATR each, assigning these new take profits from the worst entry price to the best entry price. So we have added a new position. This means that we have to set all our take profits again. We start from the price of the latest added position. Now, the price is 146.04. If you remember, we actually set the limit orders at 146.05. This means that we have had a positive slippage of 1 pip, which is great. Since I haven't shared yet the calculator file to automatically determine entries and take profits, I'll use a standard calculator for now. After we finish defining all the rules of position management, we'll have a look at the entry and take profit calculator, which will allow you to quickly and easily set new trades and calculate your take profits. So the price for the latest added position is 146.04. I'm actually going to stick to the original price we set of 146.05. This is what we're going to do when using the file to calculate the entries, so I'm not going to consider the 1 pip of slippage we had. What do we do with this price of 146.05? We proceed at intervals of 1 ATR to set our take profits. the ATR was 16 pips, let's open a calculator and we have 146.05 plus 16 pips, and our first take profit is 146.21. Where do we place this take profit? We assign the new take profits from the worst entry price to the best entry price. I have already ordered the trades from the worst entry price to the best ones, so I'm going to proceed top to bottom, and I modified the take profit for the first trade. From here, we proceed at intervals of 1 ATR, in this case at intervals of 16 pips, so 146.21 plus 16 pips, and we have 146.37, which is going to be the take profit for the next position. Let's proceed adding another ATR, another 16 pips to find our third take profit, which is 146.53. And the last one, 146.53 plus 16 pips, and we have 146.69. It's really just a matter of practice. I'm sure you will quickly get the hang of it after a few trades trading with this strategy. Now, a good practice after adding a new position is to immediately place another limit order. This way, we're always protected with 2 or 3 pending positions if the market makes a sudden large movement while we are away from the computer. We are covered with the next order at 145.73, but we want an additional one just to be safe. So 2 ATR below 145.73, which means 32 pips below 145.73. Let's use the calculator. We have 145.73 minus 32 pips, so our next order is at 145.41. Let's set it up with 2 trades of 0.01 lots each. Alright, everything's set up. Let's check what happens next. I'm going to fast forward the video until the price hits either our next limit order or our next take profit. Okay, the price hits our next limit order, which is what I was hoping for, so we can practice once again with recalculating the take profits. We've got another slippage. Our original position was at 145.73, but it was triggered at 145.725. Another positive slippage, good for us. We're going to use the original price of 145.73 because this is what we're going to do later on in the course when we will use the file for calculating entries and take profits. To this price, which is the price of our latest entry, we add 1 ATR to find our first take profit. So we add 16 pips and we have 145.89. For all the other take profits, we just need to proceed at intervals of 1 ATR. So 145.89 plus 1 ATR, which is 16 pips, and the next take profit is at 146.05, which we're going to insert here. The next one is 146.05 plus 16 pips. We have 146.21. Let's insert it here. And then 146.21 plus 16 pips, which is 146.37. Then we have 146.37 plus 16 pips, and it is 146.53. And the last one, let's add another ATR, 16 pips, and we have 146.69, which is going to be our last take profit. We could also set up new limit orders, but I'll skip that for now because this has already been a long lecture and I want you to focus on how to recalculate the take profits. We have gone through two of the major rules of position management with this strategy, adding to a position and recalculating take profits. In the rest of the section, we will introduce the last small rules and also have a look at the file to automatically calculate entries and take profits. Finally, we will close the section with an extensive live trading session where we will practice all the concepts we've learned so far.